Before we open it up to questions from the audience, and hopefully there are a few out there, so put your thinking caps on, maybe each of you can go through a recent interesting transaction that you've done, hopefully provide some insight into the current state of the capital markets as well as to how you're thinking about the investment market today. Jeff, if you can start.
Yeah, one we did, this is probably 9 months ago, that was interesting because it involved a sovereign wealth fund that is relatively new to investing in real estate. We have a partnership where we have some of our own money, the firm's money, with them. And it was a building in New York, 521 Fifth Avenue, that SL Green owns. Great operator, great partner. They were looking to bring in a minority partner. The prior group that they had been working with fell out, sort of flaked out. And to re-engage with a group, they certainly knew us and our track record, but we were also very clear it was in a partnership with other money. They had to get comfortable that we could perform. And we love the asset, partly it's on Fifth Avenue. The retail component of it's becoming more and more valuable. Urban Outfitters is the tenant, and those people who know what's going on Fifth Avenue rents, it's highly reversionary. It's be a long time to capture all the value, but it was great retail. And then we it was older Class B offices, but in a great location, competitive price with a operator who really knew how to do that type of stuff. And so we worked through it in a very quick time frame, worked through a lot of different issues, and were able to complete. And it's been it's been a very nice deal and a good partnership.
Great. Tino, recent deal.
I'll cite one transaction that I only observed from the distance, and a couple of transactions that I've been involved with personally. I know that just very recently we finally closed on the transaction involving a platform deal, a shopping center company in Brazil, Allianz, where a major operator who was an existing partner, GGP, had been looking to sell their interest. And through our previous relationship, they came to us, and the transaction here had a fair bit of complexity to it, involving everything from the compensation contracts for the management existing to how do you price a moving stock, how do you deal with the situation in Brazil. And I think we saw enough potential in the management and the portfolio. We thought that there was intrinsic value in the price at which we were able to buy this platform. And GGP came to us because they've known us for a long time, and they said, you know what, if CPP sees the value and they really want to get the deal done, they will get it done. And I think the deal was papered in the better part of just 2 months. It started fairly contentiously internally in the review process because, again, it was complicated, and we had never done a major we never purchased a major interest in a platform through a public securities market. So you had complexity of securities market, Brazil, real estate, and what have you. And I was very impressed with how the senior management of the company, all the way to the highest levels, said, you know what, this is different, it's out of the box, but the real estate guys see value in this, let's look at it really hard. And it got done. I was very impressed. Most recently, I was involved with a couple of multifamily transactions with an existing partner. They were of a developmental nature and in a secondary market, which is sort of adds two elements that are not, check boxes on our list. The review was rather contentious. The company is conservative, and when you talk about developing, especially developing in areas where you have kind of looser supply constraints and greater availabilities of land, they don't get done easily. But our senior management was able to speak with the senior management of the partners, and our partner was of the view, they basically said, look, we see this as a heck of an opportunity for us, and we are, after all, aligned. I mean, this is a 45-55 JV. So don't think highly of our 55% that we're putting in this deal that gives you concern because it's a secondary market and because it's developmental. Yes, it is what we need to do to get the returns, but we think we have two great sites, and they were able to show that they were buying the land at very good distressed prices. So, the company, again, will move for the right deal. If it sees the light of reason, they will move very, very quickly. And our execution is good.
Great. Seth, what about a recent deal that you guys have done?
Sure. First of all, I spent some time with the CEO of Allianz, and he's a sharp guy. I'll pick one close to home. I'll pick Chicago, where we recapitalized an office building. I think to frame the picture, this particular micro market was 90% occupied. The office building over the last 20 years, on average, was over 90% occupied for some very specific reasons. Some tenants left and occupancy dropped to the low 60s, so there's potentially a real arbitrage there. Overlay that with the owner really had a triple whammy. One was that he didn't have the capital to fully fund the tenant improvements to bring it back up to standard. Two, there was a loan coming due in a couple of years. And three, because he's owned it for a really long time, he had a negative tax position. So what we were able to do was come in and creatively structure something where they could stay in the deal. We came in with the majority of the capital and really inject fresh capital into the deal. Why we really like it is the quality of the risk-return dollars. The vast majority of the capital that we're spending is only when we have leases. So when we have leases that we think are good, then we'll go out and execute them. And frankly, the leasing plan has exceeded our expectation in terms of both the actual rental levels and the quality of tenants that we've been able to attract.